Hello, I'm here today with John Aldersey-Williams, Chief Executive of SeaEnergy plc. John, welcome.
Thank you.
I thought we'd start by talking about what you believe the recent Mexican contract win says about the growth prospects at the visual asset management business.
Well, what we've seen with the visual asset management business over the last 2 years is a very rapid growth, initially in the UK, and now what we're seeing is an internationalisation of that. So the capture of this project in Mexico, which is about $1 million contract, which is a big contract for us, is our first step into that market, the Latin American market, that we're servicing out of our Houston office that we opened just last year to service the US Gulf of Mexico market. So it's a sign of the growing international appetite for the visual asset management product.
Now, you've recently announced a business reorganisation. What was the thinking behind that?
Well, what we wanted to do with that was to use the resources that we had in the group in the most effective way for the whole group. So where we had the return to scene business that we bought in August 2012, that had been initially very focused on just its own part of the business, which has been growing very rapidly. But we came to the point that we recognised there were resources in there, business development expertise, some innovation expertise, that we could apply across the whole of the group. And that's what the reorganisations aim to achieve, whilst keeping the return to scene business focused on the visual asset management product, which is the cash engine for the group at the moment.
Can you explain how the JV agreement with Go Offshore and ship management will benefit the business?
Sure. When we recruited the ship management team in June of last year, we recognised that they were going to take some time to develop a stream of business. The joint venture with Go secures vessels for them to manage, and so it guarantees us a flow of business. Go have about 60 vessels around the world, and they're looking to bring more and more of those to the areas where we're operating. We will be managing the ships for them. But more widely, it's the beginning of a relationship with Go Offshore that allows us to develop further joint ventures that will build and own and operate vessels for servicing the offshore wind farm business.
Now, you announced that you aim to move into profitability in 2014. How confident are you that you'll be able to achieve that?
We're pretty confident. The budget expects us to make a profit in 2014. Most of that, as I say, comes out of the visual asset management business, which is maintaining a growth track. And excitingly for us is internationalising as well. And we're now seeing opportunities for that business, not just in the UK and the Northern European area where we started, but in North America and Mexico as well now, and also in the East, in Southeast Asia and Australasia too. So we're optimistic that we're going to maintain that growth path and deliver that profit in 2014.
And what's your strategy regarding your residual holdings in the oil and gas sector?
What we've always said about those, since we restated the strategy at the beginning of 2012, was that those assets are non-core to us. And it remains our strategy to divest those assets when the timing is right. And that's something you need to be very mindful of and making sure that when you do divest those assets, you're getting the best value for the shareholders that you can get.
John, thank you very much for joining us today.
Thank you.
If you'd like any more information, please do visit the Edison website.